Hello YouTube. We're here today to talk about great Canadian banks and great dividend payers. 5 income stocks to buy now with over 4% dividends. Canadian banks paying uninterrupted dividends since 1940. Canada's big banks are the most liquid and financially solid banks in the world. Regulators globally are forcing financial institutions to cut or suspend their dividends. Analysts are forecasting a cut for Canadian banks. Keeping dividends intact is a matter of reputation for Canada's Big Five, which hasn't cut payouts since 1940. Not even the 2008 financial crisis made the Big Five waver. The reliable stream of income, not the stock performance, is why investors hold the group in such high regard. The global economic shutdown brought upon by the COVID-19 pandemic has once again put the Canadian financial sector under pressure. It may not be facing an essential crisis as the U.S. banks did in 2008, but it's certainly in a crunch due to the connections to our hard-hit energy and real estate sectors and the escalation of loan losses. Prior to a recent market-wide rally, the TSX Banks Index had dropped 37% from its high in February. What the Big Five have going their way is that dividend ratios, the percentage of earnings paid to shareholders, have not yet climbed above 100%, a level only reached twice in the past, according to analysts. Only National Bank of Canada, the 6th largest bank in the country, was forced to issue a cut in 1993. More credibly, the banks have a better relationship with their regulator in the Office of the Superintendent of Financial Institutions. OSFI has already warned the banks away from participating in share buyback programs and raising dividends, but has allowed them to continue dividend payouts going forward. OSFI has the power to step in should the banks allow their capital ratios to sink below a certain threshold. 8 Capital analyst Steve Theriault said a bank's common equity Tier 1 ratio, a measure that determines its ability to handle unexpected losses, would have to slip under 9% for OSFI to get involved and potentially force a cut. If you get a CET1 ratio below 9%, he said, you start to get into that category where you need to come up with a plan with OSFI right away so you get back to where you need to be, which would involve asset sales, equity raises, and insurance mortgage portfolios to reduce risk-laden assets. The good news, he said, is that none of the Big Five are close to sinking below that level and are comfortably sitting in the 11 or 12% range. Now looking at our first bank, Royal Bank of Canada. The Royal Bank of Canada, stock ticker RY on the TSX and the New York Stock Exchange, along with its subsidiaries, operates as a diversified financial services company. RBC offers both personal and commercial banking, wealth management, insurance, investor services, capital market products, and services globally. RBC has 85,000 full and part-time employees and over 16 million clients in Canada, the US, and 35 other nations as of late May 2020. Current market price on the TSX is $91.84, and its 52 trading range on the TSX is $72 to $109.68. So there's lots of upside to be had as we transition out of the pandemic world. Currently pays a hefty quarterly dividend of $4.32 at 4.62%. Hasn't cut their dividends since 1940. Royal Bank has set aside billions of dollars for future bad debts if they come. Even with these loan loss provisions, the bank is still profitable. Royal Bank has got the stuff to remain the largest Canadian bank on the TSX by market cap. It's the fact that investors are currently turning a blind eye to the value play that lies before them. Historically, Royal Bank stock has rarely been so cheap. The Canadian Imperial Bank of Commerce. The Canadian Imperial Bank of Commerce, CIBC, is headquartered in Toronto, Ontario, and was formed in 1961 through the merger of the Canadian Bank of Commerce and the Imperial Bank of Canada. This was then the largest merger between chartered banks in Canadian history. Along with its peers in the Big Five banks, CIBC has operations globally and serves more than 11 million clients, with greater than 40,000 employees, currently trading at $90.86 and a 52-week trading range on the TSX of $67.52 to $115.98. So there's lots of room of upside to be had as we transition out of the pandemic world. Currently pays a hefty quarterly dividend of $5.85, 6.39%. Hasn't cut their dividends since 1940. CIBC has set aside billions of dollars for future bad debts if they come. Even with this loan loss provision, the bank is still profitable. And all of the big six Canadian banks, their provisions are way, way higher than the loan losses they currently foresee. The Bank of Montreal. Bank of Montreal was established in 1817. Today, BMO Financial Group is a diversified financial services provider with total assets under management, enough to make them the 8th largest bank in North America. BMO provides its more than 12 million customers with options in retail banking, wealth management, and investment banking products and services. CIBC has operations globally and serves more than 11 million clients with greater than 40,000 employees. Currently trading at $71.21 and a 52-week trading range on the TSX of $55.76 to $104.75. So there's lots of upside to be had as we transition out of the pandemic world. Currently pays a hefty quarterly dividend of $4.24. That's 5.89%. BMO has set aside millions of dollars for future bad debts if they come. Even with this loan loss provision, the bank is still very profitable. The Bank of Nova Scotia, Scotiabank, is the third largest Canadian bank by deposits and market capitalization. Scotiabank has 25 million customers in nearly 50 nations worldwide. Many deem Scotiabank as one of the more international banks in Canada, given its acquisitions through Latin America and the Caribbean, along with Europe and parts of Asia. Its subsidiary Scotia Macata participates in the London Gold FX, given its membership in the London Bullion Market Association. Currently trading at $54.63 and with a 52-week trading range on the TSX of $46.38 to $76.75. So there's a lot of upside to be had as we transition out of the pandemic world. Currently pays a hefty quarterly dividend of $3.60, which is a very nice 6.55%. BMO has set aside billions of dollars for future bad debts if they come. Even with this loan loss provision, the bank is still profitable. The Toronto Dominion Bank, TD Bank Group, consisting of the Toronto Dominion Bank and its subsidiaries, is broken down into three business lines: Canadian retail, U.S. retail, and wholesale banking. TD Bank Group serves more than 25 million customers worldwide, with Canadian 1.5 trillion in assets as of January 2020. With over 11 million active online and mobile customers, TD also ranks among top online financial services firms, currently trading at $60 and with a 52-week trading range on the TSX of $49.01 to $77.91. So there's lots of upside to be had as we transition out of the pandemic world. Currently pays a hefty quarterly dividend of $3.16 or 5.25%. Set aside billions of dollars for future bad debts if they come. Even with this loan loss provision, the bank is still highly profitable. Well, thank you for watching. I hope this gives you some great insight into some great dividend paying stocks. And please give a little whack to that like button and subscribe to my channel, as I'll be putting a lot more videos about stocks and home improvements and just about all kinds of different subjects. So thanks a lot and have a great day.